Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hi, and welcome to another exciting episode of the Investor Financing Podcast. And today we are going to talk about the capital stack and what it is. So this is going to be specific to development projects today, but you can take it for any type of acquisition, purchase, or so forth of commercial property. We're going to look at, for an example, we're going to look at a new construction, a new build of a multifamily property. Let's just say it's 100 units being constructed. So now the developers, they have the land in contract. They're working on entitlements. They have to close escrow as soon as they get the property entitled per their contract. They're working on the plans and all the entitlement process, and at the same time they're figuring out how are we going to fund the construction. And so we're going to talk today about how this all comes into play. So if it's a syndication deal or it's a joint venture deal, they've got to bring in equity, right? Because essentially you're going to get anywhere from 65 to 80% of costs financed in one way or the other. Right now, it's more common to see construction deals like this leveraged at about 65%. Pre-COVID, you're getting 75, maybe 80%. So right now, there's a shortage in the capital stack. And so what's common is that you might get bank debt at 65% of costs, right? And then you could have you can get Pref equity or Mezz financing for maybe another 10 to 15% of the capital stack. And then you still need to come in with 20 or 25%, right, of equity. And maybe you're doing a syndication where you're raising the money, or maybe it's a joint venture, right? So you got to bring in that 20%. Well, right now, leverage has been cut. But I want to give you some tips and tricks on some new products, because when I just talked about Pref equity, right? Preferred equity and Mezz could be 12% money, right? It's not the cheapest money in town. So if a project is in an approved area, there's something called CPACE, right? And CPACE comes in and it basically funds all the green components of a build: windows, roofs, some of the shell, some of the foundations in certain locations can be covered. So usually it's around 20% of the total construction budget that could be funded by this CPACE product, right? So CPACE is not a loan, it's actually an assessment in the property taxes. It's basically assessment financing.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
So now with CPACE, you're talking about money that could be in the high fives to mid sixes, right? And that's non-recourse long-term debt, assessed not on the property as a lien, but as an assessment. It's a lien, but it's an assessment, like almost like a property tax would be. So going a step further now, so in the past, people might have been filling a capital stack with Mezz or Pref equity, right, and paying 12%. Well, now you can cut that cost in almost in half, and you can fund these with long-term debt or long-term financing tool, right? So you're able to create a win-win structure, because in the capital stack, you got 60 to 65 bank debt. You have another anywhere from 10 to 25% of Pref equity or Mezz, but now we're talking about CPACE as a better alternative. Now keep in mind, it's got to be in a certain designated area in a jurisdiction that's approved it. So there's about 36 states that have approved CPACE, but in each county and city, there's different administrators of this program. So there's a lot of moving parts, but I just want to make this short episode just to let you know that on these development projects, what the capital stack looks like. What is a capital stack? And essentially a capital stack, if you look at if you took a pie chart, 65% bank, usually there's another 20% of Pref or Mezz, and now I'm telling you, instead of those alternatives, we should be looking at CPACE, because that is the tool that a lot of developers that are kind of learning about CPACE and the benefits, right? Not only are you getting higher leverage at a cheaper cost for developers, obviously that's a no-brainer, means higher returns, but you're also doing good for society, right? You're creating a green product that's going to have less carbon emissions and so forth, right? So it's a win-win, and that's why governments are pushing CPACE. So if you're a developer or a real estate investor building commercial properties, and this isn't just for construction, it could be for retrofitting. Okay, it could be for retrofitting solar and retrofitting upgraded energy efficient products throughout your property. And it could be on multifamily, it could be on hospitality, it could be on office, it could be on light industrial, it could be on a lot of different product types. So I just want to open your mind about the capital stack. And you guys have a great day. Please share this podcast and subscribe, and I will see you on the next show.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.